Hey, welcome back to my channel. This is Jonathan, and today I'm going to be talking about why I moved to M1 Finance. As you guys may have known, in my past videos I've talked about various investment vehicles such as using Betterment, using Robinhood, looking at other ones such as M1 Finance, which we're going to cover today, and there's some other ones such as Webull and other various aspects which you can use to grow your wealth. Recently, in the past I've always been kind of on the Robinhood and the Betterment kind of accounts, and just recently I've been looking at what can I do to better suit my goals and my needs, and this may apply for some of you as well. I first opened Robinhood up back in 2015 when it was still new to the game. It was the first brokerage that offered zero commission trading. This was a pretty big deal at the time because all the other ones were paying anywhere from around $7 per transaction, and those that are new to this, it's a pretty big price to pay when you're only buying a single share or two, which most beginning investors are. So I did that, and then I did Betterment because it's more of a robo-advisor. You put, allocate funds in, and it automatically diversifies it across a variety of different ETFs and bonds that they have pre-selected. So while this may sound great, I think for those that are looking at other options, M1 Finance is pretty unique. What's cool about it is, M1 Finance is, came on the scene in a couple years ago. I believe it's in 2015, and what they do is allow you to open up accounts using your funds, but you can do fractional shares, and it also has zero commission trading. Robinhood, you cannot buy a fractional share. You have to pay for the full share. So if you're talking about like Google or whatnot, they're looking at, I think it's around $900 right now for a full share of Google. And most people, when they're starting to invest, do not have $900 to buy one. However, they may have $50. So Robinhood, you'd have to wait until you have all $900 to do it. Whereas M1 Finance, you can do it with a $50 and get whatever fraction of that share that $50 would correspond to. So here's where M1 Finance kind of became a keen interest of mine. Another thing that they offer is a form of divestment reinvestment or dividend reinvestment into their portfolio, and this is we'll talk about that in a little bit. So when I was looking at various brokerages to suit my long goal needs, which is essentially saving for retirement and other things in a stable manner, I'm not looking to day trade. I'm looking to just set aside money every month or so and put it in one of these brokerages in which you can see some growth over the next couple of decades. Robinhood is not the ideal for this, and neither is Betterment. And Betterment, I guess I should preface it, is that it is pretty good, but you are stuck paying a fee on your investment holdings. M1 Finance, there is no fee. So this is what kind of caught my eye. So looking at it, M1 Finance, it offers a lot of different accounts. You can do your taxable, you can do Roth IRA, you can do trust, you can do traditional IRA, and you can do joint accounts. But what's unique about it is that you can open an account up with minimum deposit of $0, but you can start investing when you reach $100 into your account. And then what you can do is what they call is these pies, and they have a whole bunch of variety of pies based on experts or just kind of different growth kind of oriented aspects. So you can have, if you want to focus on dividends, if you want to focus on, general investing, if you want to focus on, these other, saving for different goals and whatnot, you can do that. And what's cool is that you can take this and you can also add variety of individual stocks and indexes that you wish to follow. So as you can see, we're talking about adding these pie structures, and then each one of these pies is broken up into kind of the different holdings that you can allocate to. So what's cool is by adding these individual stocks, you can add, Apple, you can add Amazon, you can add, Union Pacific, you can add all these different ones as part of your pie, and then you can allocate different percentages that you want these, what your contributions to be kind of weighted against. And this is pretty cool because it allows you to put, say, $50 a month, and it will split it evenly based on what you have invested and set for your allocation. So if you have 50% towards, like, say, an S&P 500 index and 50% towards Apple, every $50 you put in or whatever your frequency is, it will split that evenly. And what's cool about having a having it do it this way is that you can get buy these fractional shares, and when you get dividends from the stocks that offer it, you can reinvest it into your portfolio. And what's unique about M1 Finance is that if you get a dividend, it doesn't go directly into the stock that gave that dividend, which is the traditional method. Instead, what it does is it takes that dividend and splits it amongst your entire portfolio. So if you receive a dividend, say like $3, it would take that $3 and based on your percentage of allocation, it will spread it around on your entire portfolio, even those that do not have dividend stocks. Now there are some interesting things that set it apart from Robinhood. Those that are familiar with Robinhood know you can kind of follow the market daily. You can buy stocks at 9 o'clock, you can buy stocks at noon, you can buy stocks pretty much throughout the trading session. However, M1 Finance, the one thing is, since it's geared more towards the long-term investors, you're looking at having, you only have a stock trading window of, I believe it's 9 o'clock in the morning every day. And so when you allocate money or invest money into M1 Finance, they will, at every day at that time, that's when your stocks will be added to your portfolio. Well, this is pretty cool, and it really doesn't matter. If you're not doing day trading, you don't care about the differences. You're caring more about the long-term trends. So this is that's pretty cool. And another thing is, you can, M1 Finance is pretty nice because you can pretty much let it do its thing and not worry about it. You're getting all your different investing, planning for your retirement. You can change your allocations. You get add stocks. You can kind of keep it varied. You can change it based on your whims and whatnot. This is different than Betterment in the sense that you have no control over what's getting invested. Betterment, as you all may know, or Wealthfront, you set the allocation between essentially stocks and bonds. Whereas M1 Finance, you have a little more control on exactly what you're investing in. So it's kind of a pseudo robo advisor. What's nice about M1 Finance is, similar to Robinhood, there is a 0% fee. There is no fees at all. And you can transfer any other accounts into it. Betterment, you have to pay an annual fee, which is still pretty low by traditional standards for actively managed fees at 0.25%, but M1 Finance has a 0%. So this is one of the reasons why I'm looking at it. I like having that more control. I like being able to pick what indexes, what ETFs I want to fill in. Now there are some other aspects, Betterment and other ones, they offer things such as tax loss harvesting. M1 Finance does not do that. They do take in consideration when you have your stocks placed in, so you can kind of minimize your taxes. So they'll look at your different lots and sell those that have, your worst capital gains, and they'll try to minimize it that way. But they do not have tax loss harvesting. Now, as we've seen in 2019, in the last couple of years, there's been a lot of activity in this front, and it wouldn't surprise me to see some of these brokerages kind of steal concepts from each other. One thing I wish M1 Finance would do is allow you to have the option to buy stocks during that day at that trading period in which you wish to do it, akin to say Robinhood. But I do like the idea of being able to buy fractional shares, which is a very big deterrent if you're trying to get into some of these stocks that you want but you cannot yet afford. So I will be kind of sharing my M1 Finance and kind of going through what I think would be a good one. I'm going to treat my M1 Finance portfolio more as trying to build a dividend growth portfolio for myself, to get that passive income. And as I'll be showing in some of my other videos, I think each brokerage has its place. Robinhood's good for your day trading, or not day trading, but you have that potential, but it's also good for buying stocks during the day. But you can transfer these over to brokerages. You may have to pay some transfer fees. But when it comes to utilizing and investing, we have so many different options in today's day and age that it makes sense to try these out and to see which ones work for you. I'll be doing reviews on my progress for each one of these, but I'm excited to see what M1 Finance does, and and what aspects and benefits it provides over the other ones as I get more in depth with it. But really, looking at kind of what I want to do for investing, I think this will be a nice kind of tool to use for long-term investing. The idea of buying fractional shares, the idea of setting allocations and picking what indexes you want to invest in, all without having to pay a fee, is pretty enticing. Because, as with compound interest, your fees will compound over time. And, if you can save money, why not? So when we look at, in summary, I mean, there is a lot of pros for using M1 Finance. It's free, no minimum deposit. You get to pick your own investments. You don't have to pay trading commissions. You can, and buy fractional shares. And kind of going over the downsides of it. You're not able to do active day trading, so you have that limited window for buying and selling stocks. You don't have tax loss harvesting. There are some other ones. I don't believe you can pull in some various accounts, but I can confirm that. But I think for today's day and age, starting investing, this is a pretty solid pick to go with. So as I explore this and share kind of what my pie slices are, I think it'll be very enlightening and a lot of fun to kind of go through this and kind of see how does it compare to these other ones that I've been testing out. How does it compare to my Robinhood portfolio? How does it compare to my Betterment portfolio? And go from there. And if any of you have any other insights on kind of what slices would be good to add to my pie for looking at dividend growth, that'd be great. I look forward to hearing from you in your comments, and I'm excited to kind of share this. I think this is an exciting time to be an investor, and as with everything, it's better to invest something than nothing and see the rewards in decades to come. So that's it with this video, and I'll be posting some follow-up videos on kind of this progress as time goes on. But as always, I appreciate you guys watching, and I'll be sharing my journey.